18.
Hello and welcome to this special programming. The big one, ICICI Bank has just reported its fourth quarter numbers, and what a good set of numbers it has been. I will have Abhishek Kothari also joining in to analyze the numbers for us. But first, the headlines. The net profit has risen by over 59%. Core income also rose. Lower provisions also helped. Net profit for the Jan-March quarter stood at 7,019 crores, compared with about 4,403 crores in the previous same quarter last year. Asset quality has also improved. Loan growth has been strong at about 17% for total and domestic advances. But let me quickly go across to Abhishek first to give us some of the key headline numbers before we get you more analysis. Abhishek.
Ritu, this is a very strong set of numbers coming in from ICICI Bank. You have some of the numbers which are at all-time high. Let's look at the net interest margin. It's again back to 4% level. This was what they recorded in Q4FY22 as well. And this is primarily driven from the fact that they have had robust loan growth. Loan growth continues to be around 17% on a YY basis and about 5.5% on a sequential basis. They have had slippages of 4,200 crores. Analysts were working with a number of 3,500 to 3,700 crore. This is slightly on the higher side, but they have had robust recovery and upgrades, which is at 4,700 crores when compared to 4,200 crore in the previous quarter. The write-offs are on the lower side. This time it is at just 2,644 crores when compared to a little around 4,090 crores in the previous quarter. The other thing that you have to see is the ROA on return on asset. It's crossed the 2% level for the first time in last 7-8 years that I'm seeing in ICICI Bank's numbers. So 2.11 is perhaps the industry leading ROA that we can see for ICICI Bank. Loan growth remains robust. You know, they have been clocking 17% in Q1 and Q2. Last quarter it fell a bit, but they are back to about 17% this time around. Domestic loan growth 17%, retail loan growth 20%. On a prudent basis, you know, they have made 1,025 crores of additional provisions, which otherwise, if you remove that one-off, the profits would have been north of 8,000 crore had they not made that provisions. So overall, they have beaten our poll in terms of the profitability. You know, the net interest income is also largely in line with our estimates. Very strong set of numbers coming in from ICICI Bank, especially on the net interest margin and ROA profile, which has improved robustly. Back to you.
Well, yes, very, very strong numbers. Let me just read out a few more updates. In terms of gross NPAs and net NPAs, they're down almost 53 basis points, so gross NPA to 3.6%. Net NPAs also dropped by about 0.76% to down about 9 basis points. Provisions for the quarter are down sharply, about 63% at 1,069. But as Abhishek pointed out, there is prudent provisioning that the bank has made. Otherwise, the profit would have been even higher. Recoveries and upgrades, excluding write-offs, also at 4,693 crores, higher than the previous quarter. The gross NPA write-off is also lower. Now, the loans and non-fund-based outstanding to performing borrowers, which are rated BB and below, has also reduced sequentially to 10,808 crores, and the total capital adequacy remains strong at 19.16%. Let's quickly go across to the experts to analyze these numbers for us. Prakash Diwan is with us. He joins us, and we're also going to be joined by Binod Modi, the head of strategy at Reliance Securities, on the phone line. Prakash, let me start with you. Stellar set of numbers from ICICI Bank. Your first thoughts?
No, absolutely. I think finally you have a set of numbers that could probably change the mood for financials. You know, we've not had a great start to the earnings season with the IT majors reporting numbers which probably the market didn't like. But this is very clearly a set of numbers that has come at a time where the entire was seeing a little bit of a confidence shake-off, and especially, you know, related to HDFC. But of course, you know, HDFC has had a share of own growth dynamics and growth banks. But I think what's interesting about these numbers, Ritu, is the fact that they've managed to continue growing in an environment where others are still holding back, and at the same time making sure that the quality of the books, the asset quality, is also improved. So it's like a double, you know, I mean, it's scoring on both sides. Growth in names, expansion of names, NI income growing. You have, you know, quality of the books improving. I don't think a bank would expect more. So the balance sheet is in one of the most, I think, is the healthiest position ever. And if they were to have industry leadership coming back, I think the stock definitely will see a very positive reaction after this set of numbers.
Oh, it will. Prakash, do hold on. We also have Asutosh Mishra, Head of Research at Ashika Stockbroking, joining us. Asutosh, quickly, your first thoughts before I hand it over to other guests. Asutosh, if you can hear me.
Yeah, so you can hear me now?
Yes, please go ahead.
Yeah, so the result is a beat on almost all major front. Finally, bank has crossed on a quarter-ended basis 2% ROA and 4% NIMs. And you look at its credit cost, then if you exclude the contingent provision, then they have almost not made any provision towards loan going bad in this quarter. So it clearly indicates that on a growth as well as asset quality, bank has done very, very good job in this quarter. And clearly on the path which they have delivering from the last 3 quarters, they are continuing to deliver on that path.
Ashutosh, just one question. We are seeing strong loan growth momentum this time. However, treasury income might have disappointed. X of that, the 4% NIM, they have been able to maintain that, and they are translating it much faster in terms of the ROA versus what you are seeing for many other banks with higher net interest margin. Would you see a multiple re-rating happening for ICICI Bank after these numbers?
Surely, if you look at both NIMs on a quarter-on-quarter basis, they have seen a 4 basis point improvement on the NIMs from 3.96% to 4%, and the ROA also crossing 4%. These two are a very important trigger for the multiple re-rating of the bank going forward from here. These are the very important triggers.
Yeah. Prakash, just one question to you. Would investors shift from, SDFC Bank, they have already been under pressure, the stock performance. Would you see market favoring more towards ICICI Bank than SDFC Bank?
Oh, absolutely, Abhishek. See, the leadership for the sector was something which was kind of missing. We had every bank trying to do its bit and being a challenger to that pole position. But these numbers, and remember, this is on the back of a series of very strong quarters. Quarter 2, quarter 3, both have been fairly okay for ICICI Bank, indicating a very, very defined trend of improvement in most of the metrics. And if this is something which the market reads as a deep set trend, which is going to be there for the next few quarters, definitely you will see a lot of allocation move to ICICI Bank. And with Axis City, the merger taking its own time to get digested. The card business itself is a very new area that Axis would have to grapple with in terms of getting the juice out of that acquisition. You have HDFC with its fair share of dynamics, as I said. So, it doesn't leave much in terms of competition. I mean, ICICI is de facto the to go to the SIG stock in terms of allocation. So your question is absolutely right. I think Monday morning the answer will be evident from the market behavior. You will see allocation upgrade, everything coming through in favor of ICICI Bank at the cost of probably some of the other names.
Binod, do you also concur with what Prakash has been saying? Will we see a lot of investor interest shift towards ICICI Bank? Will it emerge as a clearer leader now?
Yeah, certainly. I mean, the way ICICI Bank has been reporting numbers for last couple of quarters, it's been quite healthy. And we understand that the steady mix of high yielding portfolio like retail, business banking, along with low cost liability franchise, they have been fueling NII growth for the company for last couple of quarters, and this is very much reflected now with NIM reaching almost 4%. So I think consistent improvement in NIM wherein we are seeing leading peers is been seeing contraction in the NIM part. So this is a clear-cut indication that the company, the valuation, and we have seen the ROE and ROA first time jumping to the 2% plus. So this is all indication that the valuation gap that is there with leading peer. I think that should bridge going forward. So we believe there is strong leg up here on for the company to see a re-rating going forward. So we continue to remain quite optimistic about the stock.
Okay, Asutosh, any other specifics from the earnings that you would like to point out, which has been on the surprising side for you?
So upgrade and recovery, if you look at, that is really encouraging point in this, and it's clearly showing that not only bank is focusing on a growth, but on the asset quality front. So old asset quality issues, they are also recovering on that front in a very good way. So 3.6% gross NP ratio is a surprise to us.
Asutosh, you mean to say, the leadership change that we saw a few years back in terms of Sandeep Bakshi coming in, the re-rating for ICICI has been massive on the fundamental side, especially on the business front?
Yes.
Okay. All right, Prakash, any final thoughts from you before we wrap up the discussion? How do you expect, you of course said a lot of investor interest will be seen towards the stock on Monday. How do you expect it to open? How do you expect the market reaction to be?
Ritu, what has happened in the last few months, if you see, ICICI has not participated much in the recovery that we saw when the markets moved up. And the rest of the market did give you a little bit of a comeback of sorts. The reason was we saw financials as a whole not kind of getting that attractiveness back. But what this set of numbers could do is that it is happening at a time where you are now looking ahead for growth on the capex cycles. Most private sector players have started announcing a lot of expansion in terms of what they could look at, business expansion on their balance sheets wherever possible. And companies like ICICI, banks like ICICI have a presence in virtually every segment that matters today. Right? They're not just getting, the beauty about these numbers is you're not getting these numbers only from one or two good segments that have contributed and the rest haven't. It's all across. So what it does is it gives you the ability to scale up very uniformly without any disruptions, without any surprises. And that is what investors like. Okay, so the ROA of 2% plus with this kind of visibility, your quality of assets going, improving so dramatically. I think all of that is very clear that in a growing interest rate, in a hardening interest rate regime, you will start making very decent earnings and your profitability goes up as you build a fresh book, while your old quality of book is no more a concern. So look at the provisioning. I mean, it's also kind of something which is it's reducing so dramatically. So there is no new recognition of restructured assets that are not adding up. You have provisioning which is also manageable. So you will start seeing a huge incremental bottom line, and that's what I think the market needs to re-rate these stocks, and particularly we'll start with ICICI. Hopefully the other banks follow. I'm hoping that the other banks also tend to follow, maybe with a lag of a quarter or two. But ICICI definitely will set the trend of re-rating the entire sector, which hasn't been participating otherwise in this rally.
All right, we sure do hope so. Asutosh, Binod and Prakash, all three of you, thank you very much for taking time out and helping us understand these numbers from ICICI Bank. We have to take a very short break on that note, but stay with us. More news and updates will continue on the other side.